TJ the Wheel Deal coming at you live. It is Friday, baby. Friday. We are. Need you to put the dog cover in my car. Of course you do. I just went live and she needs me to put the dog cover in the car. Dog cover is in my car at your parents' house. Okay. Anyway, I might have to step out here in a little bit and put the dog cover on the seats because I guess the dogs are going somewhere. My wife does not want those dogs scratching up the leather on her little Porsche because she loves that car. My Tesla Model S Plaid, they could just go on in there. I don't give a damn. It's just a car. You know what I mean? But we're very different. And that's what makes a marriage. That's what makes a market. I posted something like, I'm 90% fundamentals, 10% technicals. And some people are like, I'm 99% technicals, 1% fundamentals. And that's what makes a market. That's everybody's different. You got to figure out your own deal at the end of the day. Anyway, what's going on? TJ, Money Grab is real. Hims, yeah, Hims is just a monster, man. Just amazing, amazing growth. Very impressive company. Very, very, very impressive company. What's going on, Steven? Manesh, what's going on? Random Ram, what up, TJ? Back in the same position. I'm telling you. But you know, when the getting's good, you got to get it, right? You got to get it. I'm going to reluctantly put the link in the chat here because last night, we we had Willy on, and he's gonna go on as infamous Willy. He insulted me, said I was part of the short bus crowd. He said he moved away from Texas to get away from retards like myself. And I've never been insulted so much in such a short period of time, and I was able to maintain my cool. But I could also tell that he was really drunk. So I was just like, what's the point of getting into a shouting match with this guy? I just wished him the best, I just wished him the best. So anyway, we're going to get into it, guys. We're going to get into it. Let me go ahead and pull up the portfolio here. Woke up this morning and OMG, Tesla was doing Tesla things. And it started really affecting the portfolio in a negative way. And I'll talk to you guys about why. I am going to put the link here in case if anybody wants to join and have a constructive conversation, not hurling, not hurling insults at each other and stuff. We're not in the second grade. This is ridiculous. So anyway, let's get into it, guys. Let's get into it. Here we go. Here we go. So the portfolio is bleeding out today. Why? Why is it bleeding out when everything was up? Because I have calls on Tesla. So we're just going to go straight to it. Let's just go straight to it. We're going to talk about Tesla. We're going to talk about TSL, the gimmies, the gotchas, the goods, the bads, the uglies, the indifference, the whole enchilada. Let's just stay right here for a hot minute. So what's going on with Tesla? There's 6,500 shares of Tesla owned at 200 to 61.93. That part is A-OK. That part is good. Awesome. Moving on. There's 35 short puts or cash secured puts at 250 expiring on July the 18th. Up 23%. That part's good. Been in the trade for 7 days. Not bad. Up a cool $11,700 in 7 days. Take it. That part is good. We got 285 calls, most of which are naked because there's only 6,500 shares owned. So you subtract 65 from 285. So that means 220 of those are naked, essentially. And they're at 340 for July the 18th. So if Tesla's at 300, 301, got the call, naked call / covered call, for 340, 70 days out, it's not bad. But according to this thing, it's no bueno. Why? Because when I entered into this contract, Tesla was probably at about 270. So there's been price action in a positive way for Tesla. There's been positive price action on Tesla over the last 4 days, and it's put pressure on the calls. So that has hurt the portfolio in a really big way today. In the larger scheme of things, Tesla still has a long way to go, another 10% or so, 11%, 12% to get to 340 before I would have to deal with those. Because the one thing that sucks about selling naked calls is, one, there's a limited risk to the upside. Two, it really starts eating at your buying power. So woke up this morning and the buying power was like negative $400,000 on the option side of thing. And I don't have portfolio margin turned on yet. I just got to hit submit and I can get it turned on by Monday, which is probably what I'm going to do, because then the options buying power would match the stock buying power. So that would give us another, $750,000 to work with. And that would come in handy. And how do you know that's true? Because on this portfolio up here, there's portfolio margin activated. And that's why the options buying power matches stock buying power. So whenever the options buying power matches the stock buying power, that is because the portfolio is utilizing portfolio margin. On the big account, I have chosen not to do that yet because I haven't needed to until now. So now I'm going to go ahead and turn on portfolio margin. That way Tasty Trade chills out a little bit and they don't go and grab all of the buying power. And I wake up and I'm like, holy moly, I have to deal with this thing. So that part's good, but it's not good from a buying power perspective. I think that this one's going to be just fine. Collected $1,247 a contract, $285 over. I expect that it's going to expire out of the money. And I'm going to have made a shitload of money, and then I can do it again, and do it again and do it again. And eventually what I want to do is I want to match it up to the 200 cash secured puts that I have over there in January, sitting at 200 right now, that are up a cool 34%. So that part's good, up $380,000. That part is good. So what did I do? I had 310 calls, 315 of those sitting at the same 70-day cycle. So I just rolled those guys. I rolled those over here to 400, 250 days out, and I matched them up with the 500 cash secured puts for a net credit of $109,000. But I locked in a loss on the initial calls, right? So there's that. So, here it says extrinsic value of 1.1. It's really only like 500,000 or 600,000. So that's the issue there, is going to have to wait it out, So I'm hoping that Tesla, is in that 400 range by the end of the year. Some people are like 600, 700. I'm not in that camp. If I was in that camp, I wouldn't be selling calls, guys. That's the reality. You know what I mean? I'm not in that camp. I think that 400 is absolutely being extremely generous with Tesla by the end of the year, with everything that's going on, the slowdown in deliveries and everything else. Got some cereal here, guys. I am hungry, so I'm going to go ahead and eat some of that real quick. And then I'm going to check in on to see if anybody's clicked the link. So that's how I'm playing Tesla. These 250 calls are printing pretty good. So what could I do to free up buying power? Well, the first thing I could do is I could just close this one right here. So if I close this one, that doesn't do anything. That doesn't do anything. So I don't want to do that. That's a winning trade, and it doesn't help my buying power. So how could I free up buying power? One thing that I could probably do is roll these. Like, I'm just talking about, like, if things were to go in crazy and Tesla goes to like 330, 340 on Monday, then I'm going to be in the same situation where the buying power is just going to get smashed. So then I would just be looking to roll this over here and match it up to January, because then at that point that goes away because there's a lot of extrinsic value there. So I would just look to, roll expirations, close that out. So I'd match it up over here, and I'd probably go in the 420 range, something like that. So I do something like that right there, give or take. You guys can see there that I can get a cool 307,000 in credits and increase the buying power by 632,000. So that's the move. And that's the move that I knew that I could make with the 310s. And that was my go-to move. And it's been the go-to move ever since I sold these backstop trades. So somebody in the chat and the WhatsApp group called it a backstop strangle. So essentially I have a backstop short strangle now on Tesla, and eventually I want to have these 285 over here, because then now I got 500 puts, 500 calls. And, you know, I'd probably just put them at 400, right? Because then I got 200 wide, and then I would just manage those, you know, in about 5-6 months, I can kick it out another year and expand the highway by like 50 to 100 and be bringing in, you know, $500,000 to $1 million a year just doing that one trade over and over and over again, especially since there's another $2 or $3 million coming in deposits. So I'm, you know, kind of I'm able to do that. You know, it's feasible for us. TSOL, this was the insurance policy that is just not big enough. This was supposed to be 100,000 shares, and I just didn't pull the trigger. I got the 50,000 shares, so that part's good. Up a cool 200,000 on the shares. Then I've got 500 cash secured puts for next Friday at 11. Then I've got 500 covered calls. This is a covered strangle right here because I have the 50,000 shares at 11, and those are already in the money. This started as a 0 DTE last Friday, kicked it out to this Friday, and I've already rolled it again, and it's been collecting credits. So, but then I added the short put side. This was just the call side. So I added the short put side. So this is another thing that I could do to free up money, potentially. Like if I close this, if I wanted to free up buying power, like I'm talking about Tesla does a moonshot, I can essentially close this position right here. And that gives me back $357,000 of buying power, but I don't want to do that. You know, those are the options. I'm always looking at, okay, well, what am I going to be able to do in case if I get in a serious pickle? And then in the distance, I got the strangle, the $9 puts, and the $14 calls. So this position looks pretty damn solid, pretty solid. And I want to keep doing this week after week after week for the cash flow. And then eventually I'll close out the trade. Hopefully it expires out of the money. I still have my 50,000 shares. And then the 133-day cycle turns into a covered strangle. Right now it's just a short strangle, but it could eventually turn into a covered strangle. Or if I picked up 50,000 more shares, it would be a covered strangle as well. Because I don't want to run short strangles on TSLL. I was meant to be running covered strangles. What's the difference? I would already own the shares. So if things got out of hand, I could just let the shares get called away and get back into cash, lock in the win, call life good, right? Because I'm going to need that buying power for Tesla. Because the gimme and the gotchas, you make a lot of money selling the calls. The gotchas, this shit goes to the moon. At some point, you have to deliver those shares. Or, you know, ideally, you just keep rolling and rolling and rolling and rolling if you have the buying power. So that's the thing. So anyway, let me go over here. Let me do some live Q&A. No, nobody's clicked the link, so we don't have anything there. Long term on Tesla here. We already did that one. What's going on, Mr. G? You need to set up another FaceTime, brother. What's going on, Drew Nation? Yeah, that was a trip, right? That was a trip. Let's go, AJK. Y'all crazy. AK Willy was angry, man. He was angry. What's going on, John? I struggle to fully understand the numbers on rolling. For example, the initial premium is 150. Okay. And I roll my covered call for a $50 credit. Does that capture the previous 150 or not until the trade is fully closed? Not until the trade is fully closed. I need a FaceTime for sure, underwater and everything. Well, brother, set it up. Set it up. In fact, I'm going to be out of town a lot next week. So for those of y'all, obviously, that are members and you have the numbers or whatever, the Calendly is not going to allow you to set anything up for the weekend, but I'm going to be available this weekend. So just send me a text and we can just do the FaceTime. It's all good. It's all good. CleanSpark. I thought the earnings were pretty good. I'm excited about Riot, CleanSpark. I'm kind of excited about Marathon, even though there's some things that the reason I'm not as excited about Marathon is because I just don't understand fundamentally what they're trying to do sometimes. And when I look at like the balance sheet and I look at the cash flow statements and the income statements, I'm like, I just don't get it. So it's kind of from the miners. It's been like, even though they produce a lot of Bitcoin, they have a real big HODL and stuff. Marathon's kind of in my too hard pile, if that makes sense. Option, what's going on, brother?
Hey, what's up, man? How you doing?
Well, woke up and Tasty Trade says, hey, we don't like that Tesla's going up and you got all these calls, so we're going to zap all your buying power. And you know what you got to do? You got to make good or you got to roll. And I was like, well, I don't want to make good at the tune of 2 million. So how about we roll? And they're like, okay. But brother, I am just excited. I feel like life is good. God is good.
Damn right.
Strategy, and I have the temperament and we have the capital, so I'm able to implement those things. And it kind of just, it all works out. It all works out in the end. Talk to me about you, man. What's going on with you?
Nothing much, man. I just saw your message. I was in here messing around and saw your message. I was like, dang, let me jump on, see what you got going on.
Well, brother, what we got going on is Tesla going up and to the right, and I don't really want it to go up and to the right because when you have naked calls, you'd rather it go down and to the left. You know what I'm
saying? Yeah. But with a stock like that, man, you gotta
know what you signed up for.
Yeah. you gotta get in and hit and miss. You gotta hit and miss. Straight up, come out, start over. You gotta hit and miss.
Let me show you what we got going on here. And I'll show you how I dealt with it. Can you see it, Option?
Yes, I see it.
Okay, awesome. So Tesla on the bottom, we got 6,500 shares. So on the surface, that part's good. But then TJ started pushing buttons. So then we got the 250 CSPs for 70-day cycle. Those are doing pretty decent, up 24%. But then I got the 340 calls 70 days out. So those are getting hammered because I did these 4 days ago. And obviously Tesla's gone on a Tesla type run over the last 4 days. So that's why those are in the red right now. But in actuality, if you look at the fact that this is still, 11% or so, 12% to the upside from where it is right now, I just needed some time to run off the clock and help me out, in my opinion. And then in the distance, I got the 500 CSPs at 200. Those are doing extremely well, up a cool 34% or 385 grand. And then what I did is I had the 310s sitting on this cycle option. And when I had negative buying power this morning, I simply rolled the 310s to 400s because I'm trying to create a short strangle in the distance. That was what I was trying to do from the very beginning. But I was like, well, let me see if I can sell some short dated calls to lock in some realized gain, some cash flow. And if I get compromised, well, I know I'm going to shoot it over to the January cycle. And then I've got a 200 wide, strangle. And then I can really manage it there because I have plenty of buying power still. There's more money going into the account. And then if Tesla keeps being Tesla, and I'm talking about like going up and to the right without rhyme or reason, because that's what Tesla does. It turns into a beep stock sometimes. I could easily raise the 200, put the 250 and take in a shitload of credits. And I can use those credits to finance rolling up on the 400s and put that at like 425 or something to give me a little bit more breathing room if the stock wants to keep pushing up. That way I don't have to keep going out. Like I can use credits to finance debits, right? Because I've already taken a lot of credits collectively. but I don't want to have to keep doing that because every time you're doing that, you're losing just some fees, right?
Yeah.
So that's where Tesla sits. And then my insurance policy is the 50,000 shares of TSOL. So those are doing extremely well, up a couple $100,000. Then I've got the 500 CSPs for next Friday at 10. And I've got the 500 covered calls. Remember, these are the ones that started as the 0 DTE that I had done at 1050. And then I rolled them out to 1050 a week later, picked up a shitload of credits. And then I picked up even more credits rolling from 1050 to 11. So here we are, right? And that's for next Friday. And then I've got the short strangle. So this is the covered strangle right here. And then over here, I've got a short strangle and 9 and 14 in the distance in the 133-day cycle. And ultimately, I had wanted to have 100,000 shares so that everything could be a covered strangle. That way, I don't have any pressure to the upside. You follow me? Because when you own the shares and the covered calls get challenged, you don't have to roll if you don't want to because you can deliver the shares, right? On the short strangle, you don't really have that option because you don't own the shares. So how are you going to deliver the shares unless you're just willing to buy the shares at market, right?
Yeah.
So that's how I'm playing it, dude, in a nutshell. So I've been looking at everything. I look at CleanSpark. I'm up a lot on CleanSpark. So I could, this is still 42 days out, but the move here is probably in that 21-day cycle. If this is sitting option in that, if this is sitting at like 50% or so, because right now it's at 24%. And I know that it shows that I've made a lot more over here, guys. It's because I own some shares, right? And I did a swing trade. I don't own those shares anymore. So I just got a short strangle going on here. But when I can get to 50%, and if that happens when it's time to manage at 21 days out, you see the capital requirements are option at 806,000.
You might as well take that off, man.
No, I'm saying I'm going to take that off so that I can have more buying power for Tesla.
Yeah, but it's nothing else that position can do right now. Your IVR is so low; it's at 11. Only that position right there will hurt you if the implied volatility start increasing. It's at 11, so it's really nothing else you're really playing for with 43 days trying to get to 21. That's something I would just take off. And the reason why I say that is because if you look at your delta, you negative delta now. You see, you negative 3,000 delta. So it's like you getting short. So, with the IV being where it's at, it's just nothing can happen in that position. You wait till that IV crank back up, then get back in. Because it's at 11. It's 11.8. And I mean, you're profitable. I just take that profit and wait on that. That'll kind of, because you gotta come from being negative. You're negative 2,027 and your theta numbers is high. I mean, that's just a thought, right? Just something from what I see.
Yeah, I'm definitely not going to do that because I'm too familiar with that company. But I hear you. So, guys, here what I have is Apex Labs. So, y'all familiar with the GLP-1, the injections and stuff that people take to lose weight? So, GLP-1 or GLP plus, this is the powder. You put it in your water, and it essentially does all of the stuff that those injections do, except it doesn't go after your muscle mass. And there's a lot of these other side effects that I was dealing with those injections. I theoretically won't deal with those there, and that shit's expensive. These little 4 bags right here were $350. So we'll see how it goes. Because it really helps with your appetite control, because I have a real hard time controlling my diet. So I'm going to use a little bit of help with that, and we'll see how it goes. I'll keep you all posted. I hear your option. I'm super comfortable here. I'd rather try to free up the buying power somewhere else because this is a winning trade. And you're talking about $230,000 of extrinsic value there. Like, that's a lot of money, dude. And like, I know that stock's going to probably stay in this $9 to $10 range for at least another. I mean, they just had earnings yesterday.
But I'm saying, what else is going to happen with it just
Well,
staying?
I'm gonna collect another $230,000.
And you can't. You're not going to collect $230,000.
How do you know? How do you know?
Because you got 43 days left, and if the stock isn't really doing nothing, you got too much
Whether you're
time.
collecting data, that's what we do when we sell options. We collect.
Well, but you collect data, but you're not playing for just time to go by, right? You see what I'm saying? Because you got 43 days left. You got so much time, so you holding risks. The thing what you're playing is you're playing for a contraction of the volatility.
No, I think that's what you play for. I play for data collection and a contraction of volatility.
That's what you sell in both. But that's what I'm saying. That's how you control that risk from the naked call side.
Yeah. Well, I think that this is where the jockey is different, right? Like you're telling me that I want to run on the outside.
I'm not telling you anything. One thing I'm not doing.
But what I'm saying is we're all going to manage these positions differently. And this is a real important conversation for people to hear is we can all sell the exact same positions, but based on how you choose to manage it, your ROI at the end of the year is going to look a lot different because of the way you chose to ride your horse. That's why I always say that the jockeys are very important, very important in this entire calculation of selling puts and calls and collecting premium, because like I get what you're saying. Mathematically, it makes a lot of sense, but because I'm so familiar with this company, whereas you are not, I know for a damn fact that I'm going to close this because that $8 put is not going to get challenged at all. I could take off the call side and then I could still pick up all the put premium. You know, like that's something that I could do. I could take the risk to the upside off by closing the call side. But why the hell would I take off the $8 put when I know for a fact that thing is not going to get down?
You don't know for a fact that, bro.
I do, bro. They just had some rocket out of the They're not going to dilute. They're not going to dilute. That's the reason people hate the miners, because they dilute. These guys already said we're not going to dilute.
But what we have to understand is that don't nobody know anything in that regards, because we can't say what's gonna happen, right? So we don't know what's gonna happen.
But that's why we place the bets, and that's why we have a market, right? It's like you're picking a side based on the information at hand. But I hear what you're saying, but that one is I'm not gonna take that one off. That's what I'm gonna do. But you know, if push came to shove, I would have to. Because it's $836,000 in capital required.
If you had to, when would you take it off if push came to shove?
Yeah, I mean, it's ideal right now. It's right in the sweet spot, right? It's ideal. There's two things I could do right now. Is I could take it off, or I could try to get more money on the put side, because I'm very bullish on the stock right now. So I could like roll this one up from 8 to 9 and grab those credits. And then maybe go from like 11 to 10 and stay a little more delta neutral on the call side, because this thing does have over a 30% short float. So it could get ugly for me to the upside. It could turn into another mini Tesla potentially.
Well, and that's what I'm saying. But that's my point right there. If you were to close out that position, right, and it starts going up, right, that means now the implied volatility is going to start increasing. So when it start increasing, now you can put that same strangle on at a wider distance. You're still going to capture all of that same money that you have. You're just waiting for a better opportunity to position yourself in that stock.
So I'm trying to see what metric you're looking at, though, because when I open this up right here, I'm seeing the 58 cents and the 925. That's obviously it's up 58 cents for the day, and it's currently trading at 925. And then I see the trade price at 155. That's what I collected, and the market's currently going for 117. And then I see the extrinsic value. That's what's left on the entire option. It's 234 grand. Extrinsic rate of return is 243%, which is really high, which is really good. The P&L for the day, the P&L open, and then the profit loss open percentage. Days open is 16, days to expiration is 42. And then all I see is cap requirements of 836, profit and loss year to date 115. And then you take a seat and you're like your IV ranks X, Y, and Z. Where are you seeing all of that information?
It's right up there by CleanSpark, where it say 12. The IV rank is 12.2 by the CleanSpark, the abbreviation of the stock.
So right here where my cursor is.
Go up some more towards the top. Right.
Oh, I see.
Yeah.
Way up here. Got it.
So
Okay.
that 12.
So walk me through what does that 12 mean to you? Because it doesn't mean a whole lot to me.
Well, it means
No,
a lot.
I'm just saying, like, I'm just
Yeah.
saying it's a gauge. I've never even paid attention to it. So I feel like that's where your eye went. That's where your eye went. So I want you to explain to me what is that gauge telling you?
Okay, what that gauge tells me is that I know that the premiums, and it's basically like this: the premiums in CleanSpark are not juicy no more, right? So if CleanSpark was sitting at 40, 35, 40, that means that the premiums are more juicier. But as we can see, they were at one point, but now they have contracted. So
because they had earnings yesterday.
Yeah, so that's it. It's no more premiums in there. They contracted. So the only thing that can start hurting you now with that type of position, because what can happen if it goes up, then in CleanSpark is something that may be considered risk to the upside. Those premiums will start increasing. Remember, as a seller, we don't want that. We want a contraction of volatility. So the thing is, if you find yourself in a position where volatility has already contracted, it's no need to just hold risk on time, because anything can happen. That's the risk. But if you have already squeezed majority of the juice out of that orange, hey, look, you know what? I get back with you when your IV rank is above 30 or up to 30. Now I'm getting more money for my risk. That's just the thing, especially when you're playing those type of positions. Anytime you're selling, you're selling for either, okay, if you're just selling the put and you're doing the regular wheel strategy, you want to get the shares, then okay, that's so be it. We got that. But when you're getting, you're starting to be more strategic, you have to take advantage of other things and not just, okay, well, I think this is going to do this. No, I'm not thinking nothing. I'm going to go with what the metrics is telling me, and then I'm going to manage that way. And right there, what that's telling you is like, okay, well, I got 25%. I'll be back. Because see, I don't have to get it all at one time. I can come back and get it when volatility is, or the premiums that I want to collect are a little bit more juicy.
Gotcha. Like Enphase over here is a 30 IV rank. I see it now. Like
that's kind of, that's decent, because it can come down a little bit more. That ain't bad. I'm gonna have to be over 30, like Google,
even Google is 27. That's crazy.
See now, like Hams is 50. Now, see, I'm not gonna do nothing in there because now you're sitting in a great position with Hams because you got a high IV rank. Yeah. You get a contraction, you're going to jump up to 50% like it's nothing.
Gotcha.
You see what I'm saying?
Yeah. No, I feel like I legit learned something here today because I wasn't even looking at that. I'm familiar with IV rank, don't get me wrong, but I didn't know that it was just all up on the screen like that so easy. Yeah, it's cool.
And then you have what's the next one, Mara?
Yeah, this one had earnings again yesterday, so I'm expecting this one's going to be low.
Yeah,
low,
I'm out of that. It's nothing in there for me. I'm out of that.
Now this one's lower conviction for me, so I would be more inclined to do that on this one because I don't give a shit about the stock at all. Whereas
and then when it go back up,
with CleanSpark, I'm actually I'd be okay owning 200,000. I know it sounds crazy, but I'd be okay owning 200,000 shares at $8, so that I could ride those up to 10 and make a shitload of money. But so on Marathon, that's that frees up 225 grand, and I only got to give back. Oh shit, I still got to give back 40,000.
Don't worry about that, man. You can always come back and get that, man.
Yeah, but I'm saying I don't. What I'm saying is I don't want to be in this stock. Like I don't have to be in it. Whereas I want to be in CleanSpark, so the conviction is totally different. You know what I mean?
Yeah.
But I'm saying this would help the portfolio out to clean this position out. Hold on 1 second. So I go here, I go boom, 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 close position. I might get it to fill real quick if I do that. So you see, so that gives me some nice buying power right there.
Also,
So
you
now,
got if
so
you look
now,
at the data
now
numbers are now it's starting to decrease a little bit because you short. You kind of neutral, but if you intend to be long, you don't want to have so many negative short deltas.
yeah, so that is done. Yeah, so you see how it's no longer on the page.
What about the video?
I just did this one yesterday, dude. I like this one. I'm trying to get it to 100.
Okay, no, I was seeing the rank. That's cool.
Yeah, I'm trying to get to 100. Palantir is one that I'm in, and I'm good there. I'm good there. So I was looking at it's right at 30. See, now my eyes going to it. It wouldn't go into it before. Here, I'm good here. They just had earnings as well. That's why it's so low. Man, I can see now because I had considered, but I didn't really want to. But I had considered a couple of days ago before they had earnings of closing these leaps that I had bought.
Mm.
And I can see like where they were at, and they definitely it ain't not a lot because there was positive price movement,
Okay.
but had there not been positive price movement, those leaps would have gotten hammered. SoFi, this thing was doing good today, and now it's not because I had looked at closing out those. I had looked at closing out those leaps that way I could just because I was looking at where could I get buying power. You follow
What
me?
about the strangle? Why don't you just get rid of the strangle?
Well, I have.
Yeah, I mean, that's yeah.
This one here is freaking. This one's a winning trade right now.
You got 7 days left with that.
Yeah, I just did it not too long ago. This is a very short trade. I was just doing it for a cash grab, and
that's hurting your theta numbers too.
Yeah, but it's giving me.
That's pushing your theta numbers up because it's so short.
Yeah, but it's giving me $5,400 already. That's not bad. You know what I mean?
Yeah, I mean, you only got 22 cents left in that. Go ahead and take that shit off, man.
That would help out my buying power.
Yeah, I mean, it's come back and get it again. You know what I'm saying? You can get that shit all year, man. You got to hit them. You got some of that shit you got to hit and miss. You can come back and get it. Especially when, in this state of the market, man,
It's going to take a while.
With
this one takes a while. It's not like super liquid. Yeah, I ain't doing anything over here. If anything, I'd like to add fucking more CSPs to help me out.
Why don't you, I mean, just a thought, me. Why don't you, being that you up 32% on that 252 to 200?
Hell no.
No, not that one. The put. Just hear me out.
Right here?
No, the 200 put on the 252 day.
I know that's the one you were talking about. That's the only thing making money in this account.
Yeah, why don't you go ahead and sell 250 of them? Sell 200 of them. I mean, you don't have to keep the whole 5. Get rid of some of them.
Because I have all of this risk to the upside. So many of those things are going to get in trouble. This one's going to keep printing money. If anything, I'd consider raising the strike price on this one to bring in more credits.
I will get out of that call.
Yeah, crazy. I ain't gonna do that. Option. That's why I remember when we first started this thing that I got Tesla. You don't have to worry about Tesla. I got this thing. I'm gonna write a book on this thing, and I'll have you read it, autograph it for you. Dude, I can't get this one to close though. Hold on. I can't get, what I do? You gotta do the little deal where you go over here, right, and see the working. Mm-hmm. Is that what it is?
Yeah, you can do it that way, or you can click on activity.
You hit read. There we go. You go like that, right? Is that how it is?
Yeah.
Man, I'm already giving max money, and they still ain't closing this shit. Nobody wants that stuff.
Yeah, well,
nobody wants that one. I thought about closing Enphase. What do you think about Enphase? Although it's juicy though, but I mean, yeah. I'm winning the trade though.
Yeah, I was staying that one because it's still got a little bit of, it's still got a good IV rank in there. So that's something I would kind of, as long as my IV rank is high, I'm not closing. You know what I mean? Because I still could play for a contraction. But when it start getting low, it's like it's really not worth it. But I mean, you always, I mean, you know me, I'm always foreclosing for profits. So if I'm up 20%, you've been in it, what, 16 days? If it is what it is, then take it. You know, you can always come back. No, but you know, I would want to at least kind of.
Yeah, but the thing with that, I mean, I hear what you're saying, but the thing is in phase at 45, bro, is actually pretty exciting. Ooh, I think that might be a sort of.
In phase at 100 was pretty exciting.
No. I'm talking about like at $45, like this thing is approaching good deal steps.
I think that shit going down lower than that, honestly.
You think so?
Yep.
I can't see a world where it goes under 40, bro. I mean, what is it? Where's my stock analysis? Hold on. You gotta study the fundamentals option, dude.
I ain't studying none of that, man.
There's companies behind these tickers, man.
Yeah, I know. That drug was at 170. Is somebody holding something up there at 170 right now?
Dude, imagine how wrecked the portfolio would be if I'd have held on to those 11,000 shares, bro. I mean, this is like, you know, I don't get credit for these types of things, but I've made some good moves that have really helped out. Because man, that
it closed some of them out, didn't it?
Yeah, it closed at 89 of them or something like that. I'm trying to find the PE ratios and stuff on this freaking end phase. Yeah, it's honestly not that cheap yet either. It's like this thing's like at a trailing PE of 45. The forward PE is 20. Price to sales is 4. Price to book 794. Yeah, I wouldn't say it's a cheap stock. It's just cheaper than it was. A lot cheaper than it was. Yeah, but it's not, and it's not growing like real fast anymore either. So yeah, I'd say that in that $40-$35 range, it would have a lot of people's attention. But then you look at who the president is. Right, what's going to be the catalyst for this company? It's going to be tough. I think it's going to be tough sledding. So, what do you got going on, brother? What are your plays? Like, what are you babysitting right now?
Well, you know, NVIDIA. I kind of jumped out of that. I'm doing some futures, man. I'm just been going back and forth with like MES. /MES. Let me show you that. What
exactly? Like, dude, I have never even. Hold on 1 second. I think this is the SRXL stuff. I have never even entertained the idea of futures action.
Yeah, I mean, you know.
So walk me through it. Give me like a. Hold on. This thing's trying to work for me. Hold on. Now we're cooking. Well, that was a lot of noise for just a few contracts.
Yeah.
Come on, Tom. Got me excited with your damn thing over here. Hey, this guy, Kurtosis Capital, emailed Batista trying to get me on that Rising Stars thing. I had already filled out a form and talked to somebody, though.
Okay.
And nothing happened. So I assumed they just didn't want me. And I'm okay with that. You know what I mean? Like, it's not that big a deal. But I think that's it. It did it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 1, 2, 3, 4, 5. I have to get rid of something else option because I can't have 13. I got to have 12.
Yeah. Come on, let's get rid of something. I just want to see that. I want to see that. I want to see some positive data, man.
Where are you looking at positive data? Are you talking about these?
I mean, positive delta, your delta numbers right there. The beta weighted deltas. It says negative 500. So that means you're technically short. You're getting shorter. And see your data numbers.
That's because of all the short calls.
Yeah, and your theta numbers is high. So you gotta me personally, I'll be kind of adjusting around that to make sure I kind of stay where I want to be. But right now you're neutral. I'm not going to say you're real short. When you took off of Mara,
look at
yeah, you kind of it's like you neutral now. So you neutral. You ain't short. You just neutral.
I could take this one. I'm indifferent on Neo.
Yeah, it's at 18. Yeah, I wouldn't be holding that.
No, I'm just saying because I'm trying to get to 12. This is just I don't like the number 13. This is just my own thing right now. Nothing to do with anything. So I'm looking at which one of these I'm so indifferent on. End phase, it's like, okay, like if I had to own Neo at 350 or end phase, Neo at 350 or end phase at 45, I'd say just because of the IV rank and everything else, I'd rather own end phase.
Yeah.
Yeah, so this guy's coming off. At least I made a little bit of money. So I go boom, boom. I go close position. This guy.
You can always come back.
Well, it'll be there. I don't think Neo's going anywhere.
No.
Okay, so it's working. Anyway, so what I do, there where Neo is, do I type in something for your future stuff or?
Go /. I use this one sometimes. /MES.
What's /? Where's Matt? This guy? That one?
Yeah, MES. You can
MES
use
like that?
Yeah. That's the lead minutes. Go to the M5. Come down one more.
This guy?
No, the M5. You can do the M5.
Okay.
And then go to trade.
Okay, so walk me through, like, what are we looking at here, first of all? Walk me through, like, futures. Like, what is that? And then it's here, check futures eligibility.
You gotta get, you probably didn't go in when you first created the account. Yeah. You might want to pull that down first, before you go in there. But I mean, it's not to, it's pretty much dumbed down, right? Dumbing it down is more so saying, you have the MSM, you may have the ES, right? So the ES is equivalent to like the SPY, the SPX, right? But the futures move in ticks. So the sizes are a little bit bigger, right? So but on Tasty, you also have they created what is the MES, which is a tick size a little bit smaller. I forgot the actual ratio, but anyone can look it up. But it's a smaller future, and the contracts is a lot smaller to use. So I like to use that. Like I literally will wheel those for 7 days, right? I go sell a MES future or buy one, right?
I have to answer all of these questions first.
Yeah, you're gonna have to answer those just to say that you want to, do them.
Gotcha. Interesting.
And I just do the wheel strategy on those, right? I show it to you when you pull it up what I do. And like I said, it's like 1/10 the size, something like it's around those where I got it.
Everybody says that it's capital efficient. That's why.
Yeah, it is capital efficient. Yeah, because that's why I deal with the micros, but you're getting the same exposure. So for me, when I start seeing so much of the volatility like this, I kind of leave the equities alone, right? Because I can go get it there and it's not going to cost me as much, right? But, I still get the same type of exposure. So like when I see how the market is chopping like this, I don't mess with the equities. So like the Teslas and all that, I just leave alone. And then I go mess with, some of the futures. And then once the market just continue to grind higher and higher, I might just move over there.
Got it. Have you read and received Yes. I acknowledge. I assume I'm answering no to all the. Success. Okay. Enable portfolio margin. Oh, dude, it gives me a pending, bro. It won't let me do it right now.
Yeah, it'll be done tomorrow. It'll come up Monday for you.
Okay, no worries. So let me go.
But you can still see them though. You can still go to them, but probably you just couldn't trade them. But I mean, it just gives you a different, and you do it the same way, right? I pull up. It's a little calculations to it, but I know a little, learned a couple little inside tricks to look at to know how much I'm making, how much I'm getting, and then I just manipulate, just play the same option game, right? I just play the same option game that I'm playing in any other stock. So let's say, for instance, I wanted to come and I will this. I go to the 7 days, and see. So when you're looking at it, it's not
crazy ass bar. Wow.
It's not really the same, but in regards to the bid ax. So what I do is I look at the extrinsic value. So if I wanted to say sell the 55.65, I'm going to pick up $127, if I was to sell that. But I look at the extrinsic value because extrinsic value is what you're always going to take in. It just helps you be able to, for me, a quicker way of deciphering the numbers. But you will have to multiply that by, I think, 5 or 10, if I'm not mistaken, and then come up with your number or whatever. But you can just look at the extrinsic value. That's and then I will just sell that, and I just sell that repeatedly. And what happened is once my 7-day get tested or it goes into money, and I would just take that future contract and start selling covered calls against it. So, or if I just wanted, it's more cheaper to just buy a contract of a future of like MES. It might cost you about $400 to buy that contract. Right.
Yeah, but I guess what I'm saying is fundamentally, it's a futures. Like when I look at the futures, it just tells me what the expected open is of the Dow or whatever. And a lot of times that holds up. A lot of times it doesn't hold up, right? I don't know how many times the futures have been green and then the shit opens red, right? When I look at the Dow, the SPY, that kind of thing, right? The NASDAQ. So what are these contracts exactly? What is this MES?
MES.
What is that?
It's a micro E mini. So it's like I said, you have the ES, which is the big future contract, right?
No, that's what I'm saying.
Well, no, I'm telling you, that's what I'm saying. If you have the ES, right? That's the ES. That's the bigger one, right? So like I said, you have SPY, you have SPX, and then in the future realm, you have the ES. So when we looking at the ES, you have what's the other one? The MQ, which is the NASDAQ, which is like QQQ. You have all of those same setups in future forms. Now, the ES is a much larger contract, but Tasty has created for smaller investors the micros, right? So those micros are a little bit more affordable. But the thing is, it's all about the exposure of the overall market that you're trying to grab. So for me, it's like I say, like how I like to do it. If the market is moving in weird ways, I might not mess with equities. I just come and trade the market because I feel like IV of 25 is a lot higher for me, when normally if you look at the SPY, it normally be around the volatility in there might be 10, 9, it all depends. So 25 for me, I become more attracted to just wheeling the futures.
Yeah.
So it's just something. I mean, it's just something else that one does, man. Maybe it just depends on the person, but it becomes a little bit more attractive for me, and that's what I like to do. You can buy bonds. You can put on a position in bonds if you think that bonds are a pile or whoever it is going to cut the interest rates. If you think you bullish on bonds, you can go /ZB. Go to the U5 contract and sell a vertical spread in bonds. So I mean, just something different because you got to diversify, right? You want to do different things. You know, I just can't stay just equities all the time because it makes it, you know.
Yeah. That's interesting. I'm gonna stay right over here. It's easier for me. I feel like I have to learn a whole different deal. Dude, that would take me probably a year or two to get done.
It's the same thing, man. It's options, right? It's options. You don't have to learn anything. You know how to wheel, right? You know how to, you know, if you get tested, you know how to roll. You know, it's the same thing. It's the same exact thing. When I tell you it's the same exact thing, but it's more capital efficient.
Sure.
You see what I'm saying?
Yeah. My buying power went through the roof already. I'm good.
Yeah, because you know technically you're a little neutral. So with the market coming back down, it's helping you out.
Yeah.
So that TSL, let's look at that real quick. That's what I want to see. Can you TSLL?
Oh, that's my baby right here.
Yeah. Now pull out that side, you know, the little arrow over there by the account.
This guy right here?
Yeah, pull that out.
Okay.
And come down to that it's a option chain. Come down right there. Right there.
This guy? Order chain, you mean?
I mean, yeah, damn order chain. Yes, sir.
Okay. Okay, now what?
Okay. Now just click on where it says open or unclick close because I can't see it because you got that the little icon, the wheel deal.
Okay, hold on. Let me move that. Give me a second. You're talking about the Wheelers thing right here?
Hold on. Wheelers. Yes. Okay.
There.
Perfect.
Is that better?
Yes, sir.
Okay, now what? You say yes, sir. Like I feel like I'm in the movie Color Purple. Option, stop it. Yes.
Yes, sir.
You ever watch that movie with Oprah Winfrey and Whoopi Goldberg and
yes, sir. Yes, ma'am. Everybody, man.
The dude with the eye. What was his name? The dude with the crazy eye. The black dude with the eye. Real amazing actor.
Yeah, I don't really watch slave movies, bro.
Forrest Whitaker. Was that his name? Forrest Whitaker, maybe. 1 second, my wife. Baby. I don't know. I'm live on YouTube. I didn't look at it. What's going on? No, not right now, baby. That sounds good though, but you make them better than they do, so I'm good. I don't like their tacos. All right, bye. My wife's always trying to feed me, but then she tells me I'm fat. How do you figure that out? You think I'm fat? Don't feed me, woman. Are you there, baller? Where's AK? Brother, I did a stream last night, and this dude, AK Willy, came on, and he said that I was a member of the short bus crowd, and he's glad I wasn't wearing my helmet, and he moved out of Texas to get away from retards like me. I was like, tell me how you really feel, Willie. Oh, and he said that Rocket Labs is going to $1 million.
Man, you know, that's how it is, right? You know, everybody have their opinion. You know, nothing wrong with that.
I'm gonna try to pull it up, dude. This is the 40-minute mark on the live I did last time. We all need to laugh, bro. And I kept my composure because I thought he was drunk.
Okay. What time? You said you came on late?
Yeah, like at 11 o'clock last night.
Oh, that's okay. Oh, damn.
Yeah,
okay.
Dude.
Hey, look, you know what happened when you come out at the dark, man. You know,
it reminded me when I was driving Uber late at night. You can't complain when a drunk person gets in your car. You know what you signed up for.
Get a little wind out there.
I was like, bro, dude, I totally regretted that stream last night for a hot minute, yo.
So you had the link up too?
I put the link up just to see if anybody wanted to shoot me. That's a rookie mistake. Yeah, Rocket Lab. Dude, let me pull it up real quick. Trust me, this is worth it. This is worth it. So I'm gonna go here. Hey, Baller, talk to us, Baller. I see you over there.
What's going on, TJ? Can you hear me?
I can. Let me pull up this video over here so we can get comedy relief. But talk to me, man. You're back in doing your
Novo.
old dirty dog tricks.
Same situation, bro. I can't help myself. I cannot help myself, TJ.
You're like a crackhead.
Bro, like I literally, like I wanted, because I got out initially because of the IV. I was scared of the earnings. I've never held options through earnings, and I wasn't gonna sleep that night, so I'm just like, let me get out of it. I broke even, made like $40, but at one point I was down 20K. So that's like I just kept. Remember, I kept posting. I kept averaging down. I just kept buying it every time it dipped, and it worked. And now I'm back, and of course it goes down right when I'm back in. So maybe I just have bad luck with this stock, honestly.
What is it? Which one is that you referring to, bro?
NVO, Novo Nordisk,
Okay.
Ozempic maker, Denmark.
So right here, man, I got their competition right here, baby.
Oh my god, bro! And Hims is everybody's buying Hims and selling.
Bro,
Novo.
my buddy did this right here in 90 days, 45 pounds.
Wow. Oh
And God. All you do is you put it in the water before your main meal. He was doing it before dinner.
Yeah.
And dude, he like had such a hard time eating for like 90 days. Like, cause like this shit just kills your hunger. And his muscle mass, he has a weird scale though, dude. He has this scale that he stands on and he holds on to these little deals and it gives you like a body composition type thing. Like, have you ever been to a Rocks, those nutrition stores?
Mm-hmm.
And then you like sit in there and they give you like this body scanner thing, like your right arm's got this much muscle, your left arm's got this much muscle, and like how you're asymmetric or whatever. And so he has one of those at home. This scale's like $400 or $500 that he has. He holds on to these little deals, and it tells him his whole like body composition. Dude, this dude didn't lose any muscle. Like whenever I was on Manjaro, I was losing weight, but like my arms got 2 inches smaller. You know what I mean? And I was like, I didn't like that. Like I didn't like the way that I was looking. Like everything was just getting smaller. My waist was also getting smaller, but I wasn't like nearly as strong in the gym and stuff like that. So his body fat went down by like 12 percentage points on that stupid little thing right there. And he was like, the diet just auto corrected because he just wasn't hungry and drank a shitload of water.
You said 45 pounds in how much time?
90 days.
That's crazy.
Yeah, that's crazy.
Well, he was a big boy though. He weighed 260.
Wow.
Crazy.
Yeah, but now he freaking feels amazing. And then he's only taking half of what he was taking before. Because he just does because the lifestyle changed, right? So he's not craving, the Burger Kings of the world anymore. Because my body craves soda, bro. Like it craves ice cream, it craves candy. Because I've been doing that shit for so long.
Bro, I can't go a day without ice cream. I swear to God.
Yeah, you're skinny, bro. How old are you?
19. I'm
I used to be like that too, and then all of a sudden I turned 30, and oh man, that ice cream is what I'm trying to get rid of now.
I'm underweight though. That's my problem. I'm 130 and I'm 5'10. I should be like at least 150. Like all my friends are 150.
Yeah, but your metabolism's extremely high right now. So
literally.
Yeah, and then you're probably running around a lot, right?
Yeah, I do some treadmill, basketball, and then some weightlifting.
Yeah, so just give it time, bro. Give it time. Your testosterone will start slowing down in a couple of years, and you'll naturally start putting.
Oh, it's already low. I take like honey packs before the gym because it's like low, like really low.
That's crazy. So anyway, guys, let's have a little comedic relief here today. This is going to be fun. This is Wheelers After Dark. I've got it.
Bro, you ain't had no business up. Oh, Lord.
Bro, let's just all have a laugh at my expense, okay? But I want y'all to comment on how cool I feel like I made, and I haven't seen this clip yet, but I feel like I maintained my composure because I was just gonna, freaking boot him off the stream, right?
I wouldn't do that, yeah.
But I just didn't want to do that.
Nah.
So anyways, check it out. Is it on the screen or no?
Yes, it's on the screen.
Oh, hey, what's up, TJ?
Here we go. I'm doing well, man. How are you?
Sorry, I caught you here. I'm watching this damn. It's overtime on the Vegas thing. But no, man. I just wanted to point out one thing because I'm a small account guy.
Right
Like I
on.
think a lot of the guys that watch, under 50K, and I just want to tell you the situation I ran into where I started selling the covered calls on
Okay.
margin, basically, where I didn't have the cash in there. So before I did that,
For calls or the cash secured puts? On margin.
I'm sorry, what's that?
How are you able to sell calls on margin? Or are you talking about selling cash secured puts?
No, I had about $40,000 worth of Rocket Lab
Okay.
stock.
Okay.
And so I started selling covered calls on what the hell was it? Man, you caught me at a bad time.
Oh, he's the one that clicked.
I can't remember what it was. But anyway, I actually was on Rocket Lab. I was selling them leaps January 2027 for $40. And before I did that, I had buying power of like $120,000. And I also had the ability to withdraw from my Webull account like $25,000 or whatever. And as soon as I started selling those covered calls, my buying power went down to like $15,000. And the amount I could withdraw out of my account was like $4,000.
So you're trying to understand
And
why that.
no, I mean I understand why it is, but I did it so aggressively to start because I went on vacation down to Vegas and I took money out of my account, like $5,000. And then once I got back from Vegas, I repaid it. It was not a problem.
Right.
But now I feel like if I withdraw $5,000 from my account to go to Vegas or whatever, that gives me like $1,000, buffer before getting margin called. Even though the cash secured puts that I sold are, technically in the money. You know what I mean?
So I guess I'd have to like really see the position so that I could like really visualize it. So you have
I sold 5 of them.
So walk me through how many shares of Rocket Labs did you have? So I'll put it in the chat so I could like have a visual. I'm a visual learner. But that's why when I do FaceTimes, the first thing I do is like, show me the portfolio, dude. I don't need you to say anything. Just show me the portfolio and I'll know where you're at.
Oh man, I can't.
No.
I don't know how to do that computer stuff. All right, so I got.
You have how many shares of Rocket Labs?
Well, basically 2,000, because I have about 500 of them at $5 options that I bought 2 years ago.
No.
So
talk to me about the hard shares because I feel like
exactly hard shares. I have 1,500.
We're scrambling.
I have 1,500 shares of Rocket Lab.
Okay, super. Because this is the way the portfolio. This is the way that your broker looks at these things, right? The real asset that you have here is the shares. Everything else is an option, right? And the reason I say the real asset is because the shares don't expire. So you have 1,500 shares of Rocket Lab.
Yeah.
So that's worth money. And then you bought leaps as well, or you sold puts and calls. What did you do after that?
I bought leaps like
leaps?
2 years ago. $5 strike price. So those are golden. But
when do they expire though? Because they might be expiring here pretty soon.
They expire December 26 or January 27, something like that.
Okay.
They're up big.
Yeah.
And I actually want to take ownership of the shares.
So you need to
But what screwed me though, man, is selling these freaking cash secured
Yeah.
So notice how he said that I have these leaps, but he wasn't real sure on when they expire, and then he just threw out a year that was like 2027, and I'm like, well, you couldn't have owned those for 2 years because the maximum that you can buy a leap is like typically 2 years. So how could they already still be expiring 18 months down the road? So at this point, I was like, dude, I feel like you're just making up these numbers as we go, but I still, indulged him, if you will.
Yeah.
Puts, even though they're in the money, it dropped the amount I could withdraw out of my account.
So you sold cash secured puts at what price?
I sold them and bear with me, I didn't have any cash in the account, maybe $100. I sold them at, and these are basically December 26 and January 27 or whatever. $40, $27, $10. A lot of $10 ones. So basically, I was on the hook for maybe like 20 grand or something like that for cash secured puts.
Okay, so hold on 1 second, AK.
Yeah.
So you sold and what is Rocket Labs trading at right now?
Like 22 or something like that.
Okay, so hear me out real quick. You have a commitment to buy shares of Rocket Labs at $40 and at $27. And Rocket Labs is currently trading at about 20, correct?
Yeah.
So that's not good. That's not a good trade. Like, I think that you might have a fundamental misunderstanding of a cash secured put because you have an agreement to overpay for shares when you can go buy them on the open market right now for $20. So you would have, how many contracts do you have at 40 and at 27?
The exact amount I don't remember, but you forgot the main part. I got paid for these goddamn contracts. I got paid $2,200 for a $40 contract. That means they need to be at $18.
No. That's your break even, my man.
That's a break even.
But when you sell a cash secured put, you are financially obligated to buy those shares at that price if they expire in the money. Now, yes, I understand that you have a break even of 18, but come expiration Friday, whenever, fast forward life a year and a half, whenever these contracts expire, those shares are going to get put onto you at $40 and $27 respectively if Rocket Lab stays at these levels. So you are
shit, TJ.
Yeah,
God damn. Everyone fucking knows that.
But what I'm saying,
it drops goddamn the amount that you can withdraw out of your account by that amount. By 4,000. If you sell $40 put, it drops it down. It shouldn't do that. But it does.
But your brokerage has to protect itself because at some point,
my brokerage is sucking balls. I don't change brokers like you. I stick with fucking Webull. And they're going to take $4,000 for every goddamn $40 put I sell and take that out of my freaking buying power, my withdrawal power. It's ridiculous. I just wanted to know.
That's what a cash secured put is, though, AK. I mean, you committed, you contractually obligated yourself to buy these shares at $40. So the account's not going to let you go hang out and play with your money in Vegas, knowing that you have this contract that's underwater right now.
Well, that's just ridiculous. Why can't the brokerage see the writing on the wall? Say, hey, this was a good trade. You know what I mean? And I don't mind buying Rocket Lab at 40. I don't mind buying them at 27, especially, January 2027. Give me a freaking break. To give me now where I can only withdraw on basically it's a $44,000 account. I can only withdraw right now $5,500.
So let's just say Rocket Labs were to go to $10 because it could happen, right? It's very unlikely, but it could happen.
Hell no, it ain't happening. Jesus Christ.
If you knew that, you'd be Cleo. You don't know that. I mean, you don't know that.
I'm goddamn rocket scientist. Rocket Lab is not going $10.
That's fair.
All right,
but
so
a lot of people could have said it was never going to go to 40, but it kind of did that too, right? For a hot minute.
that's why I moved out of Texas. Get away from fucking retards like you. Let me ask you this.
Why are you so angry at me? I'm not the one that placed that trade. You did.
Whatever, man. It was a good trade. It's a damn good trade. I'm getting screwed by my broker. You know what I mean?
But what makes it a good trade? If it's trading at $20 right now, and you have an obligation to buy them at 40, how does that make it a good trade?
Because January 2027, they're going to be trading at like $1 million. So yeah, it's obviously a good trade. Let me ask you this though, TJ.
Trading at $1 million, AK.
And I appreciate you not wearing your helmet on screen here. I know you're riding a short bus everywhere you got to go, Uber, whatever you want to call it. But if you got goddamn $10 cash secure put that you fucking sold, all right, they ain't going down below fucking $10. I sold like 10 of these. You know, I hate to be a cursor or whatever, but cunts. And I collected I don't even know. $40 freaking dollars a contract. It was ridiculous. And now these little contracts are trading down at like $75. So in reality, I could buy it for $45 or $75. Is that going to say I got 10 of those? So I'm on the hook for goddamn 10 freaking thousand goddamn dollars. Is that going to give me $10,000 of buying power back that I lost? You know what I mean?
Yeah, I'm not
Even
sure.
though I don't want to buy it.
Like you said, I'm riding the short bus, right? That's what you said. Anyway, my man, AK, I wish you the best. You have a good one, bud. Guys, was that not gold or what?
Damn.
I'm saying this is what happens when you do wheelers after dark, baby.
Hey man, you look. Oh, you ain't had no business. And then look, there's nothing wrong.
When he think our Rocket Labs are going to $1 billion, like, what are we doing? Why aren't we in Rocket Labs right now?
Look, there's nothing wrong with doing wheelers at the dock, but you know you can't put the link in the chat.
Well, I didn't know he was crazy when I put him on, though.
But I mean, I can't speak for AK. You know, I'm sure.
Well,
you know,
he was angry because he couldn't use his money to go gamble in Vegas when he's over here on the hook for $40 on Rocket.
Exactly, and I get it, right? I understand where you're coming from. It's like, you know, that difference in understanding that, okay, I see buying power, but your cash that you see in the buying power, two different things.
Yeah,
you may see money jump in there, but you just can't be taking it.
He wanted to take a loan option.
You can't do that. If the stock at 40, now it's at 20. You got, you know, you want to hook. But I mean, you know.
Hey guys, this lady made a point about this GLP-1. I did some tests when I first got on Mounjaro. It was something about a thyroid. Here it goes right here. Make sure everyone something about thyroid cancer in your family. We actually did a test, and it was like $100, and to see like what stuff you're like predisposed to or whatever, a genetics test. And I didn't have any of that stuff, so I was a candidate. But that's something that you want to be cognizant of, because these GLP-1s can be very dangerous. So anyway, so Baller, you are in NVO again, right?
Yeah, I'm in NVO.
And you have and they just did a deal with HIMS, correct?
Yes, and CVS.
And CVS. So what's your play? Walk me through your play.
So I bought the 65 calls expiring January of 27, and it's the same contracts except I have a year more because my other ones were expiring in 26. And I'm hoping to sell when it hits around like 75 a share.
So it's up today, $66.
Yeah,
Call it out
it's going.
again, Baller.
Say that again.
Can you call it out one more time? I missed it. I didn't hear it. I wanted to look at it.
Yeah, NVO 65 call January 2027.
Okay. Okay.
I think it's like the most undervalued play. Honestly, I haven't found anything better than it. Honestly,
So
like
you don't think it's more undervalued than say Google?
no, not even close. Because NVO is trading below all of its historical averages, and Google's still above a few of them.
Damn, I missed
But
it.
does Google make billions of dollars?
Yeah.
Does NVO?
NVO makes around. Let me see how much they make around a quarter.
I
mean,
mean,
obviously-
does Google have a balance sheet that the government wishes they could duplicate?
No, Google obviously is growing way more. So like it does make sense. Like whoever's in Google, I just look at NVO as like a better value play. Like their PE is only 19, and then how? Let me see.
And what's the PE on Google?
Google is. Let's see.
I have,
17. Yeah.
that's what I'm saying, dude. I'm like, because I was thinking about that whenever you first had this play on.
Yeah.
And I'm like, you only play one stock at a time. This is the reason I'm bringing it to your attention.
Yeah.
I'm like, dude, if I was gonna play just one stock at a time, I'm sorry, dude. That thing's gonna have to be Amazon, Google, Tesla. If Tesla was in the 175 range. Like,
So, yeah.
because what I'm talking about, BR, is I want a stock that no matter what happens in life or in this world, I don't see a way that this thing's going out of business, because you're buying options, so now you need things to happen during a certain time frame, right? Like you are directional, if you will. You're like the anti-option over here.
Yeah.
Option
Yeah, exactly.
plays for volatility contraction. That is his game as I know it, and he uses J Libra Lizard Zebra Labradoodles to get there.
Yeah.
He does not like to be directional on a stock. He sells options whenever the risk makes sense, and then as soon as they contract, he's out of there. Whether it's 10, 20, 30, 50%, it is what it is. But he doesn't write out the data trade. Option, you can speak for yourself, but that's kind of, after a couple of years, that's kind of what I gather a big part of your game is.
Mm-hmm. Yeah.
Now, if you were going to just play one option at a time, are you going to do it on an underlying that you feel like no matter what, you have a real super solid underlying there to help you out? Or are you going to do it on, not that NVO isn't solid, because I mean this company's not going out of business either in all likelihood.
Yeah.
But it's also not Google. It's also not Amazon. I mean, just calling the spade a spade, right? It's not a Mag 7, probably for a reason. It's not, let's throw one in its space. It's not Eli Lilly. There's only one Eli Lilly, right? Like, we all need to recognize that. There's only one Eli Lilly.
Yeah. I think it's a better value play than all of them right now. Like, I'm not saying forever, just like right now where it's trading. I think their earnings on Wednesday were really good. You know, they're at record revenues, and the stock is still down 60% from its peak.
So I think that's a real nice teaching segment. I used to always look at where the stock was in comparison to where it is, and I would automatically draw the conclusion that it's cheaper. But if it's 60%, if it's $60 less than from where it was, like the peak was here and it's over here, $60 less.
Yeah.
On the surface, it sounds to be a cheaper stock, correct?
Correct.
But what if they issued a shitload of shares along the way? There was a lot of dilution. What happens if the earnings slowed down
Yeah.
it might actually be a more expensive stock. Down here, it's just trading cheaper on a dollar per share basis.
Yeah.
It doesn't necessarily mean it's cheaper by the regular standard metrics that we look at valuing stocks. And it took me a long time, but it took me like 3 years doing this full time before that really like caught on in my head, because I would just look at, well, Tesla's at 300, that was at 200, much better do at 200. But there's other metrics that go into play. That's why there's like the Peter Lynch's of the world and the Warren Buffett's of the world that are like share price tells you like the least amount of information about a stock sometimes.
Yeah, no, I share price, you're right. It doesn't mean anything. You have to look at like the fundamentals. But I mean, I'm not gonna lie, yeah, it's been tough because I haven't made any money since March. The last trade was American Eagle. So like I'm hoping this time it actually pays because I was stuck in Novo for 2 months, you
Right.
know.
And
just
then
to
why
break.
and why are you and then why are you hell bent on buying leaps and hoping that those print? Like why wouldn't you sell some CSPs if you think that it's such a good value?
Uh-huh.
Or why wouldn't you do put credit spreads that are less capital intensive
Uh-huh. Okay,
on
that's that.
on NV, what's it in NVO, right? That's the
Yeah.
ticker.
Yeah.
Novo Nordisk, however you say it.
Yeah, Novo Nordisk, yeah.
I wouldn't you ring the cash register is what I'm saying.
That's a great question.
Put a real big bet out there,
Yeah.
and then you're basically hoping and praying that it goes up and to the right. And why aren't you at least selling some calls against it if you wanted to do that? Why wouldn't you try to bring some of those premiums to lower that break even and increase the likelihood for a win at the end of the day?
Okay, that's a great question. So the reason I don't do CSPs, I used to do that. I used to like just wheel full time. That's all I would do. But then the problem is if I just sell CSPs on it, I'm basically, if I don't end up getting a sign, then it keeps going up. I'm basically chasing it to the upside. You know what I'm trying to say? Like then if I get
what I'm saying, but you already bought the calls. I'm not saying take the calls off.
uh-huh
I'm saying why don't you sell some CSPs or some put credit spreads in
with it.
conjunction to it? That way you're ringing the cash register while you're waiting for this big move to the upside.
Okay. You're saying have it with the calls I'm having. So
Yeah, like,
just
dude, I'm not even a big how can I say, I'm not even advocating for you not to be all in on one stock.
yeah.
If you're playing it from multiple different ways, that creates a level of diversification. There's a lot of people that are just riding that short bus, like that guy said, and they're never going to get that.
Yeah.
But I could take a stock like Tesla and play it 3 or 4 different ways, and it's going to give me a lot of different levels of exposure to that stock. Now, obviously, Tesla goes to zero, I'm screwed. But we can all agree that that's the case with any stock, right? We have that risk from day one. If your underlying ultimately does not perform, it doesn't matter what you do unless you freaking bought a bunch of puts, right?
Yeah.
So there's different ways to play the stock, and that gives you different exposure to that particular underlying. I'm not saying you have to go get a bunch of different tickers, dude. I'm a big fan of this, dude. If you need 20 or 30 tickers in your portfolio to feel good about yourself, why aren't you just doing the SPY and the Qs and the boo and call life good?
Exactly. It's quality over quantity.
You created an ETF anyway. Why don't you just go do an ETF and go learn how to golf or make love to your wife or something more useful? Like this game's not for you. Stock picking is not for everyone, and that's okay.
Yeah. It's quality over quantity. Like I rather just do one stock and then just wait for a big payday instead of chasing. Because like honestly, like the premiums, it works for the big boys like you because you're working with like unlimited money, But like for me, it's like I'm gonna be collecting pennies. So it's like that's what I look at. Like if you're gonna wheel, it's gonna be for people with like millions and millions. Because then it's worth it.
I don't think that's true either. Because with 250 grand, you make 6 figures a year, and that's nothing to sneeze at, dude. There's 99% of Americans can survive on 100 grand a year, and that is what you can make with the $250,000 account. I'm talking about you should be able to extract 100 grand a year, and you should still have your $250,000 intact. Now, are you going to keep growing that? You're going to have to be very fortunate to do so.
Yeah.
But you can essentially live off of an annuity that you're managing, so to speak.
Can I just want to add one thing to it. If
Yeah.
you know, and you said what I forgot exactly. When did you buy that car, Baller?
Recently.
I bought it 2 days ago. I
All
put 25K 2 days ago. Then I added another 5K yesterday because it dipped.
Now, that's just the thing from when I'm looking at it. And I'm just looking at it from a position standpoint.
Yeah.
You know, that's the problem sometimes with buying them. Is like when you bought it, you buying it when it's too expensive. That's the first thing. It's too expensive to be buying it.
Correct.
And it's other strategies that you could use to get that same exposure, which would be a lot cheaper, right?
Yeah. Yeah.
So also what you could do and what TJ was saying is like, yo, what call was it again?
65.
Is the screen on the thing or no?
No, nothing is up there.
Okay.
Because I can't. What
I
call?
was trying to pull it up.
All right.
NVO.
Yeah.
Okay, so let's walk through your situation, and then maybe option and I could be like, if we were in this stock, this is how we would probably look at it. So you're James,
Yes.
27 or what?
Yeah. Yeah. The last one. Yeah.
And then what are you, 65?
Yeah.
So you basically said, hey, here's $1,745.
Now TJ, before we go there, I want to just right click on that 1745.
Delete it or what? What do you mean?
Just delete it.
Okay, there it is.
Then click on the axe. Right click on it.
Hold on, let me make this a little bigger. Okay, go ahead.
Right click on that.
Okay.
And then go there. Now, what this is going to show you is the pricing of how much that option is going for.
Yeah.
Do you want me to go on 20-year or what?
That's fine right there. Now,
okay.
You bought it. Let's say you paid 16. How much did you pay for it?
I paid 1784.
Okay, so you bought it yesterday and it was probably up like 17 and some change. Now, see, for me, when I'm going to buy something like that, you see where that green bar is?
Yeah.
I want to buy, not that one, the other one, TJ. That's
the lower one.
Yeah, you want to know that it's being cheaper than where you bought it. Now, how I know it was more expensive because I just look up there at our favorite number, the IV rank, and it's sitting at 53.
Yeah.
Right. So getting and buying that at that time, you massively paying for that.
Yeah.
Right. And if it continues to drop just in time and you don't get that move, you're gonna just be losing so much value of that option. So what TJ was suggesting to you was go sell a call against that. So if you go and you sold the what? Go hit the trade table, TJ. You got the 65.
Yeah, so I'd probably be me over there. I'd probably be looking at the 80s.
Yeah, my
I
break even is
wouldn't be in
83.
the same cycle. First of all, I'd probably be over here in the 28-day cycle. And if it was me, I'd be like, well, let me at least ring the cash register over here at like $72 or so. That was me. And I'm going to pick up $144 because I'm like, I'm out 1,700. I need to ring the cash register $140 a month or so. That way, every month that goes by, I'm at least getting that data that's coming off the clock. And obviously, you're doing better than that right now because the data is not going to really eat you until the last 3 or 4 months. But I'm going to do that if I'm waiting on that up move. And then if these get challenged, I'm not going to fight with them. I'll close it out and then I'll let the stock run. But me, I don't know what option would do.
Now, see, with me with that is that remember when we setting up positions like that, they it's based off of the width of the spread and how much you paid for it. So if he paying $17 for that and he sell like the 65 and 70, that's $5 wide. That means you just buying in risk. I mean, you just bought risk and it doesn't matter. But for me to set that up to get that exposure, because all you got was 64 deltas. That's all you got. You just purchased 64 deltas. Now let me show you something. Go to the 42-day. All right, open up the 42-day.
Yeah.
I want you to sell the 65 call.
Okay. So right here.
Mm-hmm.
Okay.
and buy 2 of the 60s.
The calls.
Calls, correct.
You're gonna do a ratio spread
Buy 2 of those.
of the 60s.
I can't see because my face is down there.
I got it right here.
I'm on.
So it's saying your buying power is reduced by $654.
Take
Did I do that
the,
wrong?
yeah.
Edit.
You want
Edit.
one of the short calls. You got 2 of them. You want 1 of them.
Wonder why. Well, let me clear this out. So we're going to sell the 65, and then we're going to buy the 60, and then buy the 60.
Buy this. Yep. So buy 2 of the buy. All right. Now just click inside.
You see it automatically puts it at 2 on the other one.
Yeah. Okay. Now what I'm saying is, what I want you to do is go ahead and cancel out the short call. No. Okay. Just click the X on the 65. I'll show you how to get it up there.
Right here.
All right, now hold up. Before you do anything, click in. Go ahead and sell the short 70 call. Right there. All right, now inside the green, you know, where the 65 is, highlight that. So click inside of there.
Right here.
Now push it up to 2.
Okay.
It's still showing 1 contract. Push it up to 2 contract.
Oh, you fucker.
Yeah, just before you click there, push it up to 2 contracts. So unhighlight that, unhighlight the green and highlight the red, highlight the short, and come down 1 contract. I can't see because you got the pictures right there. I can't see what it is that you're pressing.
Hold on, let me try to do this.
And this baller is just, I'm just going to show you how to pick up more deltas for cheap. Even though it seemed like you buying it farther out, I'm going to show you how to pick up more deltas, because that's what you're playing for. You're playing for a delta movement. All right.
Yeah, exactly.
All right. So now what? You're going to sell what?
Okay, buy 2 of the 65 calls.
So this guy right here. So
and then
buy 2 of them.
Okay, because you still okay. What's going to happen when you sell the call? Press enter.
Okay.
Right. Now sell the 70. All right. Now hold on, TJ. You ain't got to do it that way. Just highlight the red, and then you see where it say quantity right over the price down at the bottom. The arrows come down, move over a little bit right there. Quantity. Go back the other way.
Okay.
All right. There you go. So you see how many? Okay. Let's do this. Move that 65 up to the 60.
Okay.
Okay. Now right there. That's giving you 107 deltas. That's more deltas than, average 100 shares, right?
Right.
So what that's saying is that for every dollar it goes up, you're going to collect that, you make $100, right? And that's only costing you $1,408 for the next 42 days. You see what I'm saying? So if you get your massive movement in such a short period of time, you're going to make the money that you're trying to make. But if you don't, you can continue to roll that same position out month after month. And you can also sell calls against that to reduce the price that you see there. So that makes it a synthetic covered call. And that's going to save capital whenever you're buying things that you got to physically pay a debit for. Because like paying a debit is mean, you want to try to get some of that value back. And like, see, for me, I will come out and go to like the 7-day, and then I will sell a call against that. So let's look at that from the curve view, TJ, so you can get the visual of what it looked like. Hit the curve view, and then hit analysis. See, you washed away all of that extrinsic value when you bought this, you know. So now if you was to buy that, you right there with the stock, and opposed to when you buy that call, you got to make up that value. Here, this going to move dollar for dollar. If it goes straight up, you got unlimited profits to the upside, and look how much you pay for that. But if you look at how much you pay for that call, and then show the same thing, you got that extrinsic value that you got to make up because you paid for that. So this is just another idea of what you know.
But then what happens if nothing happens within this 42 days? He's out $1,400.
Well, no, because what you're going to do is you're going to roll that, right? So what we're going to do is I'm not going to just leave that like that. I'm going to come sell a shorter dated call against that. You see what I'm saying? Yeah. And if you was to sell a shorter dated call, now you're reducing that the debit, and as the stock go up, right? So let's say it keep going up, you just keep ratcheting that zebra up as it goes. You just keep rolling it up, following the stock. You know,
really, is that what it's called, the zebra?
Yeah, you just continue to ratchet it up. But it's all about the deltas. You see what I'm saying?
Yeah.
It's all about the deltas. And if you look right there in the middle, that's 107 deltas. The call that he bought, even though it's way out, it's only 67 deltas. So what does that say? Okay, for every dollar it goes up, you're going to make $67?
Yeah.
You know, but here, if the stock stays, it's going to be, you're not going to lose your value so much because look, go back to that trade. Let me show one more thing.
Okay, so this guy, okay.
It's only $4 of theta, negative theta. And that's over the cycle of the lifetime of this. So you're only losing $4 a day. That's why I say we'll sell something against that, and we can actually turn that to positive theta. And if it comes down, you're not going to lose that much money in opposed to if it was in a longer dated cycle. Why? Because those too long, for one, you got the short call that's going to help you, but those long two calls are going to hold extrinsic value. So you're really not going to be dying out of the position as fast. So it gives you time to fight it through just in case you don't get the direction that you want. So just little things like that, you know, you can kind of look at, you know, especially when you're buying, you know.
Yeah, it makes more sense. I get it. It's less risky than what I'm doing because like I have no protection on it on mine.
Yeah. And TJ, go to his trade again and just click on the 60. Click on that call at NVO real quick, because you can just look at it. Which nothing is wrong with it. Baller, continue to do what you do, but just just a different thought, to have, right? Go to the trade table. But I'm never going to tell no one not to do something. I just like to kind of
give all the ideas. No, I appreciate that.
Go to his trade.
Oh, way over here.
Yes, sir.
65.
He bought that. He bought the 65.
Yeah. That's all I have right now. 17 contracts.
All right. So the date is it's a little.
He's at 64 delta, but to be fair, if this thing goes up to like 70, then that's going to probably be like a 70 delta. And that is the beauty of buying those leaps.
Look at the curve. Look at the curve view of that. Because you see that gray line, that's intrinsic value. You got to make that up. See where it's at. See where the price is. You see where the red flag is. You got to make all that up.
Yeah.
You got to make that up, bro. That you got to, because you paid for how much you paid for that.
Yeah, because he's he needs this to happen, and he needs it to happen in a really big way. Now he does have time, but he's still got to make up that $17. First of all, he's got to make that up. So
make that up, bro.
Nothing good happens until you're like $82.
And see, the thing why you put that, sale is because you want to kind of reduce that intrinsic value, that extrinsic value. You want
What
to get
about what about turning this into a debit spread option? Would that be the worst thing?
Yeah, because he really ain't gonna make no money that far out. The only thing he could do is turn it into like
I mean,
a diagonal.
Amit seems to do pretty well with those. He does these debit spreads, and he's made a shitload of money, like on Robinhood, I believe.
Well, I don't know exactly, but I don't know exactly what it has on. So I'm just saying from what I can visually see with this one, I would, if he sold at 65. So keep this in mind. You sold that for $17 and he sold at 65. Go to the trade table. Let's see if we can pick up some money off of this. Go to the 42 day. So he sold that, you got the 65, go to the 42 day. If he sells at 70, that's 75. Go to the 75, that's $10 wide. Come down. But he gonna pay $15 for that. So see, that's still too much. So that's why I wouldn't sell that, because you got a $10 wide spread that you paying $15 for. Look at the curve view on that. You automatically lock in the loss. See that? I'm never going. That's why I don't do that, because you got to know that your width of your spread and what you're selling, because you can sell that, and that, if it shoots up on you, you dead. You may think you ain't dead, but you dead. Because you look at it. It's nothing you can do to the upside. You're taking a loss.
Yeah, I'm sorry to cut you guys off. I do have to go.
Oh, okay.
But thank you. No, I appreciate it. Thank you. I'm sorry. It's just something happened like last minute. I have to go. But thank you guys. I appreciate it.
No worries, man. I gotta go too. I just got word that my bike is ready. It was in the shop. They replaced the battery, so I gotta go pick up my baby.
But thank you guys for having me. Appreciate it.
Yes, sir.
You too, man. Appreciate you. Good luck with that trade, my man.
For sure. Enjoy your weekend, guys. Thank you.
Thank
you too, bro.
All right, Option. I appreciate you, my man. We'll live to fight another day. I think the market's chilling out a little bit right now, which is good news for me.
What TSL? What is TSL at? One more time before
1140 something.
Did it? Because I didn't really.
11.
I try to look at it and see where you at before you be in them 7 days. Okay, yeah, you look good.
I'm gonna be all right. And then I'm gonna keep doing this. I'm gonna keep rolling this 7 days out, and probably next.
That's what I wanted to see. I wanted to see how much credit. I wanted to see how much credit you had. Pull out that arrow over there. That's where we was at. Yeah, but we had jumped off it. Okay, now hit where it say closed up there to your That's telling you what's open. Go ahead and click that. All right. So you got $5.61 per contract in credit. So you see all your credits on the side.
Yes. Now the closed isn't click. What's closed is gain, loss, and open. Or do you want me to erase everything?
Yeah, you can.
Which one do you want me to show? Huh?
No, just leave open then. Just leave open, because that's the position that we're going to be looking at. Or at least going to leave those up there then. And scroll. No,
there's open. I don't.
Yeah, just leave it like that. Scroll up. I'm trying to find the 7 days. Right there. There you go. That's when you started selling the 7 days. So you're actually up on that position. Come all the way down. Yeah, because if you look down where the 7 days, not right there, come down. No, that's your other strangle. I'm talking about the 7 day position right here, where you were selling the 7 days.
Yeah, that's right.
That's saying that it's marking at 152, but it's at 125, so you up like 13 grand on that. So as you keep rolling that and rolling it, this is telling you the credits that you're taking in, and it has your you're marking your trade price. So on that position right there, you up 15 grand on it.
Yeah, it's been good. And then I just recently put on these the cash secured puts on, right? This was due, and this one's doing well. So that's gonna give me more upside, or because I'm saying that, like, in my mind, it gives me a higher break even than just having the call, because the put side is new, right? I didn't have these on last week. I just put these on to kind of match it up, if you will. And I had
now one more thing, TJ. Open. You said it was $1.52. Go to your just click on this the 10 and 11 real quick. Just want to show you one thing. 10 and
Okay.
11. Just right click and close those. It's going to take us to the trade table. Full. All right.
Okay.
So, go to table. Then go after that. I want to see some. Now, say you wanted to switch that around, right?
I started at 9, but I moved it, or 9:50, and I moved it to 10 so that I can.
But this is when we say buy the gut, sell the wings. So let's say, for instance, you sold the 11 and sold the 12.5. So you got $1.52 in credit that you picked up per contract. If you was to sell the but you couldn't do it in a 7-day, obviously. You'll have to go out in time. But this is like, say for instance, but if you was in a 44-day, right? If this was 44 days, instead of rolling to the 70-day, right? What I do is I will then retake that position. Let's say this was the 44 days, and I will buy that back and restructure the strangle around the stop. But you'll be giving back a portion of the credit.
Yeah.
But you still have now positioned yourself the way you don't have to go so far out in time to, kind of, extract some more of that premium.
Yeah.
But yeah, it looked good, man.
One thing I'm not opposed to doing is increasing the strike price from. One thing I'm not opposed to doing is simply increasing this right here to 1050 and picking in more credits because I'm bullish, right, going into next week.
I mean, I would do. I mean, yeah, but the main thing is that you already made like 50% off of that. So damn right.
Yeah,
right?
but I'm thinking that gives me another $8,000. You know what
exactly. I mean? And then you booking 50% of that contract that you just had. So that's perfect.
Yeah, so that's one thing that I've considered, but we'll see. I mean, because there's going to be China talk, Switzerland this weekend. Depends on how that shakes out. So I don't want to overmanage the position because it could easily come back down to like 1050 in one day, on Monday. And
well, if that's the case, if you're going to sleep overnight and think it's going to come down, don't leave that money on the table.
Yeah. No, so we'll see. We'll see.
So you got 14 grand left. Yeah. I mean, you can always, like you say, you can always roll it out.
I'm hoping to keep doing this and doing this and doing this, and eventually
you can
getting to this 130-day cycle, and then I've got
they all come into
then there'd be 1,000 now, and then I'm hoping at some point. I just don't know why I didn't do it. I was supposed to buy 50,000 more shares, and then I wouldn't be in any predicament whatsoever. But it is because it's the only one that's in the freaking money.
That's the only one.
Son of a gun.
But that's good though.
So it sucks when you have a plan and you don't execute 100%. I stopped at that 90% mark. You know what I mean? And just because I had this, it's stupid. It's stupid. Because right here you see the brokerage cash. I was trying to get it to 10 million just to see what it looked like.
Now you know me, right? When I see something that's in the money, I like to, especially that close. But when will you think about rolling that out?
But honestly, the reason I didn't address it too much option is because if these got called away, that's going to erase these 50,000 shares, right? And I was like, that wouldn't be the worst thing. I bought them at 755, so I'd be booking a hell of a win there.
Okay.
Because originally I was going to sell them at 10, right? And we're at 11.
So look, just do one more thing for me. Right click on right there. Go back to the 11 call. Go to analyze.
Analysis.
PAM analysis. All right, now try to expand it open a little bit, just to give you a visual of what I'm. All right, the other way. That's as far as it go. Okay, so this is me, right? If I don't, and I'm just saying how I roll. This is for everybody else, whoever might had a question about rolling and how I will probably roll. If I'm tested, I'm going to roll to the next expiration because that's when you're going to pick up your most extrinsic value. Right. If I got the conviction that it might come back, my next roll has to be at that break even. So the break even is saying what, 1143? that's when I will roll to the next expiration. If it don't come back. Because
Right.
if it go any further, you're not gonna pick up, that much money.
And where you see that break even, this right here?
Right there. Come on down. You can see right where it
Oh, where the green and the red meet.
So that's more of a visual. So, but that's me. If as soon as I'm tested, I'm trying to pick up all the credit I can pick up.
Yeah.
Right. If it goes past that, I'm never going to let it go past the break even. But after a while, you keep rolling it. Like we say, that's going to continue to, widen itself out.
Yeah. Cause I mean, just look at this thing here. Like if I do here and I roll both of these right here and I go to the 14-day and I go here, for instance, and then I go here and I go here. Now I've got.
That's going to give you 48-cent credit.
Right.
Hold on.
No, just hear me out. I'm not doing it yet. I'm just going to do it right here real quick. But I'm picking up $23,000 more dollars. I got more aggressive on the put, but I'm also qualified for more upside on the call. This is again if I was like ultra bullish on the position.
But you think about it, you also picked up another dollar of intrinsic value for the shares. Because remember, you wanted to get rid of it at 10. Now you all the way up to 11.50. So that's a whole nother dollar of intrinsic value.
It was at 10. It was at 10.50, I think, the original.
Yeah, from 10.50 to 11.50, that's a dollar that you picked up. You see what I'm saying? Of intrinsic.
Yeah, but that's the gimme. But the gotcha is if this shit tanks to like 9.50, then there's a part of me that's going to be like, man, you could have let those damn things go at 11 and call life good, right? So, because this is a 2 times leverage play on Tesla. So Tesla goes up 5%, this thing's going up 10 and vice versa. So it's real easy to look at the optimistic point of view, whatever the trade's going your way. But you do have to look at the fact that this thing, even if Tesla's flat, this thing's going to be going down a little bit, right? Because that NAV erosion and everything.
Well, that'd be good if it go down for you, because that means the 11 is constantly dropping and you just making money.
Yeah, and I'm going to pick up more money.
Man, I mean, if it goes down to 9.50, then that 11 call, you picking up whatever value that's in that call. Now the put, that's going to be a different story. But
yeah, but if I just rolled it out, hear me out. If I just rolled it out and I left it alone, I don't have to take on any more risk on the put side.
No.
And I leave it at 11, but I still bring in credits. I bring in credits, which is going to expand my break even at least.
Okay, and then, but you know what I would do? Look, just let's pull that 11 down. Pull it down to 12. Let's see what happened at 12. Pull it down to 12
on my credits.
But see, even though
I'm gated $1
intrinsic value.
Yeah,
you see what I'm saying? Because you're getting
potentially.
Yeah, you're getting. But remember, you still got the same credits that you had.
This one, I'd be more interested because I'm picking up now some decent credits and a little bit more money on the shares because it's a lot of money, right? It's 50,000 shares, so we're talking about
that's what I'm saying.
$25,000, right? It's a lot of money.
That's what I'm saying. Your intrinsic value that you pick up would be much greater. So I would sacrifice credits for the intrinsic value.
Yeah, but this is, again, you'd have to be like super, super bullish because this thing's crazy, right? It can do whatever, but the thing is for the downside is if it goes down, I'm going to pick up 50,000 more shares because the stress that I'm feeling, I don't want to feel it, and it would go away if I had the 50,000 shares. Because over here, I'm expecting that this 14 call is going to be problematic. You know what I mean? At some point. Because I'm bullish on Tesla in the long term. In the short term, I'm actually bearish on Tesla. My thesis has been wrong. Now, mind you, it went all the way to what? 305. And then it got rejected.
Okay.
And then if you look at the charts, and again, this is where I do study the charts, 295 is a very pivotal point for Tesla. So whenever people look at charts, there's something that they need to consider. And I don't know that a lot of people do. But charts are very useful, but it's about settlements. So like intraday isn't as important as the settlement price, right? So 295 was a real big area for Tesla, but it needs to settle. It needs to close above 295 and some change. If it doesn't do that, and it's already creeping back down to 295 right now, so it needs to close over it to really be a super bullish setup going into next week. If it goes back below down 295, then it's neutral, and then the bears are like regaining control. Because Tesla's been in a congestion zone of like 265 to 290, 295 for a hot minute now.
Okay.
So it has to, so it already broke out. So that's a good sign for the bulls, but breaking out and staying out is a different thing. You know what I mean? Because there's like a bull flag going on with Tesla if you want to like really get all geeky with the technicals.
Okay.
And that bull flag is, it's like real bullish, but it has to close above 295 and some change today. If that doesn't, yeah, if it doesn't happen, then my short calls, they're gonna be printing again. You know what I mean? Like that, the stress goes from here to like here, and my buying power goes up because when I got a bunch of these calls on, as the stock price goes down, my buying power goes up because the risk to the upside is diminishing, right?
Yeah.
And that's why, like, the game that I played is very buying power intensive, if you will. And that's why I wanted to take some of those trades off, even though I felt good about it. Like, I feel real good about, you know, at 350 and 450. But it's about like not having buying power tied up right now because I might need it to go play Rescue Ranger on Tesla and TSO, or not TSO because I have shares, but to go play Rescue Ranger on Tesla. But dude, I gotta run. I gotta put on some road clothes, and I gotta get my motorcycle boots on, get my helmet, my gloves. I'm gonna go pick up my baby. Gotta pick up my baby.
Yeah. All right, bro. Well,
appreciate you, my man. Thanks for all the help, man, and thanks for that little tip because my eye was not seeing IV rank, and now it's like one of the first things I'm seeing.
Yeah.
It's a powerful gauge.
Yeah, because it tells you, you know, if there's no money, you know, if there's no money in it, then why am I still in it, right? I mean, for me, you know, I don't.
So Eddie Box is saying, get the roll expand and getting more, but can you please approach the 70 best time to roll expand? To me, it's whenever I'm at break even. But for option, he likes to roll right whenever his strike is touched. So again, this is where the jockey rides the horse a little bit different.
Yeah, because when you roll when it's right there, that's when you pick up the most extrinsic value. That's why I like to roll right then and there. But it has to be, you know, within that. If it's 30 days, that some would do 21, but if I'm tested at 30 days, then I roll. But if I'm
that's a real good point, dude. The tasty trade way is deal with your options 21 days to expiration. Whenever I'm dealing with naked calls or short strangles, because I don't own the shares, I'm really looking 30 days out. I want to have more extrinsic on my side to avoid any type of catastrophe that could have been avoided just by simply rolling the shit. Because you don't own the shares, you don't have as much dead money and all that stuff. So rolling early and often really isn't as big of a deal as opposed to whatever you have the shares, you just have a bunch of dead money sitting out there.
Yeah, and that's why, like, in for me, if I'm in that 45-day mark and I'm tested, I'm not gonna roll. I'm not gonna go any further because it's just more time. But that's where you come into rolling up your calls or rolling down or up your puts, taking in that credit, and then you restructure the position, restructure the trade until you get, you know, to that 30, 25, 21 or whatever day mark, then roll out again. That's all it is, man. It's just all about credit, bro.
Absolutely.
Credit. So
I got to run, man. I appreciate you guys. TJ the Will Deal signing off as option. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.
Where's my? I don't know.